Hey, good morning there. Let me know that you can hear me. Chantal, I'm sure you can, should be able to hear me. Streaming has started. Okay. All right. All right. Good morning, everyone. Welcome to the PPI Trade Room, also Empire State Manufacturing. My name is Lee Goldstein. I'm the trading director at 10-Minute Trades. Please remember all the trades we discuss for educational purposes. It's possible to lose money trading futures. So let's get started this morning. So the markets, what a surprise. The markets are a little bit volatile. Wow. Um, there seems to be some possibly good news about the Ukraine, maybe. So the markets are very, very bullish right now. And gold is moving the opposite way, which used to be the way gold always used to behave. Not always, but often used to behave. So this particular report trades in a variety of different ways, or two major ways. It trades by itself, or generally by itself, which I would consider today mostly by itself. Although Empire State can sometimes have an effect on the market, everybody's definitely looking at PPI because it's producer prices, it's inflationary. That's what the markets are looking at right now. So I think, so it's basically trading by itself because Empire State is not considered a major report. But just be aware, it can sometimes have an effect. So PPI has been at times a family money trade. And it's had some strange behaviors also. So we're watching it and analyzing it. And we have an alternative setup also, somewhat similar to the range trade that we used for CPI, because these inflation reports right now have the potential to be extremely volatile at the moment of the report. And the range gives you the opportunity to miss that initial, what might be a whipsaw. And if the market then continues in a direction, the range will work very well. And we've been finding with our testing that the range style setup works when it trades alone or with other instruments, other news. So it's been a very interesting setup. It worked really well on CPI last week. Doesn't guarantee it's going to work well today, but the testing is good. It looks, the range trade on the NQ looks like a very nice trade. It did get stopped out in January. Now, January was not PPI by itself. So if you look at the DMM, you really have to read it carefully. You've got to read it carefully. December was a stop. Now, one of the things about this report that absolutely is a concern is a bracket of 5. I personally, with these markets, can't use a bracket that small. Now, sometimes it'll work. It might work. But if there's a good move and you use a bracket bigger, what you need is your target still to get hit. So you need a good move. In other words, if you use a bracket of 10 and it only moves 12 ticks, then you're going to have trouble with your trade. The one thing we can see, though, is every single move was bigger than 15 ticks, which if you use the bracket of 10, might get you to your first target, depending on slippage and where you get filled. So, but the market is volatile. It's a concern that if you use a bracket of 5, that you'll get filled early before the news hits, which probably won't happen, but a bracket of 5 can fill you on the wrong side also. And that's another positive using the range trade on the NQ. You miss that first burst, and that's actually what the range is created on. So today, while it looks really good on the DMM, I don't think the markets resemble the markets of November or September or July, where maybe a 5-tick bracket would have worked. But I will tell you this, in my journal, I go back to July, and my notes said, might not have been July, might have been August, but either way, I went back quite a ways, and my notes said, use a bracket of 10 on this report because of gold volatility. So maybe there's the interesting thing is when I got into the room this morning, gold was kind of quiet. I got here about 7:30, and it just started getting more volatile as we got ready to open the room, like 7 minutes before the room opened. It's moving quite a bit again. So I think that this is a reasonably high risk of volatility on this report, which probably makes the report a little bit riskier than normal. But we do have an alternative NQ range trade that, we've never traded it live on this report. I've done some testing, quite a bit of testing. It looks very interesting. So I'll set up a range NQ trade, and I'll set up a gold trade. But my big difference on gold is I just don't think I can use a bracket of 5. I think it's too small. It's too small with the volatility of the current markets. Let me show you December. So December didn't work. And it traded by itself. You could see there was quite a bit of pre-trade volatility that morning also at the gold open. That's the gold open. That was a big move on the gold open that morning. This was December. Let me check one thing because it's very helpful. If I show it, and we do, I don't show enough of it. Let me just look at one thing real quick. So targets we were using were pretty small. All right, let's see. So here's December. So it looks like possibly the current price at the time looked like it was about 1797.80 or 90. So it's not 100% a 10 bracket would have saved you, but it did fill. It did fill on the wrong side. Okay, that we know. Now it looks like I'm thinking I used a 5 or a 6 bracket on that. What's interesting is the ES moved in December, and I tested many other months with the ES on this report, and it didn't have good moves. So there's not really an ES alternative. But so it moved the opposite direction last in December. January, it traded with Thursday jobless claims, and the DMM is not reflecting when this trades with retail sales or unemployment because it's a lot of news. It changes the reaction significantly. So then in November, this was November 9th. Just looking at some of the settings. Targets small, 5 and 9. Haven't been using big targets on this trade. I think today, if it's going to move, if it's an offset, a big offset like they're expecting, inflationary, it's going to move. Although you also have the volatility of the markets to deal with today. So November, it filled in about 14 seconds. And it didn't have a very impactful move in November. And you can see it traded by itself, and it had a small offset. It wasn't a very big offset either. So not an easy trade in November. It was hard to trade it because it didn't go into profit until the very end, and then it popped. And let's look at one more. Let's look at one more. So let's go back to July. So it had a very big move back in July, very large move. And it was trading again by itself. And it looks like a 6-tick bracket. So it's been checkered, challenged, okay? Donna, we're using gold and the NQ. Gold is April and the NQ is March. So the question with gold is, are we going to get a big enough move to overcome a big enough bracket? If you use a 5, there is that possibility it'll fill early. Or wrong side is more of a possibility. So what I would do is go somewhere in the middle, because it's been not as volatile as I thought it would be this morning, given the market. So I'm going to use an 8. And I'm going to leave the first target small, and I'm going to make my second target a bit bigger. So, because I think it's possible the market could move on this. And then the entry time is 8:29:59. It's a breakout. Gold, I'm just labeling the trade. I'm trading it. So I'm using a little bit bigger bracket 8. For us, it's we don't have letters on our contracts, Donna. Ours are numbered, so it's the April contract. Maybe somebody out there knows what the letters are. I've never used a platform. It's been years that I've used a platform that used letters for contracts. Maybe someone else out there knows. So that's my gold setup. And it's volatile, okay? And this is not even yet the open. Now the NQ, I'm setting up a range. Let's check our time sync real quick. Canadian housing starts were really late. The news came out like 45 seconds late for some reason. Checking my time sync by going to the website time.is. So the NQ, I have a range trade that I'm setting up. So that means I start at the top. I have ticks above the range are 6 and below the range are 6. April is J. Graphic shown on chart. You want to see the range. You have a range start time, 8:30. And I've got a target for 20 ticks and 50 ticks. And the stop is 20 ticks. and then the activation time. So you have a range start time, and then you have the end of the range, which is your entry time. That's when the orders will show up, and that's 8:30:04, 4 seconds after the news. 8:30:04. NQ range, PPI, and then you have to choose range trade, traditional range trade. Now, I might have 2 trades to manage. It could be tricky. Generally, with the range, you let it play out. You might have to move your stop halfway to break even. Now, gold is opening now, and it's volatile. It's volatile on the open. So we'd like to see it calm down, certainly. Let me go over the range setup one more time. Ticks above the range is 6, ticks below the range is 6. Graphic shown on chart gets checked. And then we have a range start time, 8:30. And I'm using targets of 20 and 50, a stop of 20. And then the end of the range is at 8:30:04. The end of my range is 8:30:04. And that's a traditional range trade. Now, gold is responding to the open. Okay. Gold is responding to the open right now. So there is somewhat of a history where Empire State, sometimes they're like, you have Richmond Manufacturing, Empire State. Sometimes those reports don't release exactly on time. Now, gold looks like it's testing the low, right? That old magnet friend testing the low. That's pretty close to a test. I would seriously consider that a test. It's a tick or two further than I would normally like to see personally, but I'd like to see maybe 1 or 2 more ticks, but it's probably going to do it. So there are people that trade that gold open. Today might have been an interesting morning to trade it because you have a big trend in the direction of a new low also, right? So it's an interesting, and gold had started moving down before the open. And then sometimes what it will do, it tries to fake you out, loves to fake you out, and makes you think, oh, this is definitely a short gold open. And then it reverses the second of the open. Let's record this. All right. Any questions? Everybody good out there? So PPI, producer price index, they're expecting a pretty hot number, 7.9. The previous Looks like it was 8.3 if investing.com is correct, and it looks like it is. Financial Juice agrees with it today. There was a little bit of news this morning, early this morning at 5, right? The Eurozone had GDP, which was matching, and the German ZU, which is an economic sentiment report, was very negative. So the German economic sentiment, that used to be a phenomenal moving report, especially on the DAX. We used to trade that report at times. It's always been early in the morning, 5 in the morning. So we have about 5 minutes to go. I'm expecting a decent move on PPI. That's what I'm expecting. Because it's an inflationary report, I think the markets are looking at that kind of data. And then we're going to wait for the move to take place on the NQ and see if we get a range trade. Now, canceling on the NQ, I would hold my trade for 40, 45 seconds before I cancel. And then the cancel on the PPI is approximately 20 seconds. I think it'll fill before that. But I would probably be willing to cancel PPI if it on gold if it didn't fill in 20 seconds. That's enough time for this report to fill. If the news comes out. Dutchy, I think the news in the world is up because of Ukraine. It overpowers a bad financial report, don't you think? I think Ukraine is pushing the markets this morning. So the DAX is up with all the rest of the world markets. So a couple of minutes to go. Gold retracing back. It's open. And see how it tested. That's why I considered that a test of the low. It bounced right off it. Bounced right off it. Peter on YouTube is asking what charts we're looking at. We're looking at Ninja Trader charts, gold, and the NQ futures, Peter. And folks, a lot of folks are watching on YouTube. Why not hit the like button, subscribe, hit the notification bell, and you'll know the next time we stream. So let's see if the market calms down a little bit. So we got about a minute to go. So we got a range trade on the NQ, a breakout on gold. And it's what's our first trade room of the week. And we got about 20 seconds to go. Not quite. Our brackets will turn on at 59 on gold. Okay, so I took a small trade and the NQ, look, that range trade is so much better than the gold breakout. Look at, I want to point something out there. I'm turning off all my reports. I took a small profit. I had to manage the gold trade. And let's look at the news also. We have conflicting. Let me just take a breath because this was very, very difficult trading for me. NQ is reversing now. The PPI news. Now it's interesting that they call it positive. It's not positive. It's considered a high number. It's not, it's negative news. Okay, but it shows green as positive. That's incorrect. Okay. Empire State, very, very negative manufacturing news. So you had a whipsaw on gold. All right. And we were lucky to get a small profit on gold. And I have a new trick that I'm going to be able to show you all that I'm going to start using very possibly in the room, a feature of the software in these volatile markets. Now, gold did a very quick reversal. What's interesting about the DMM, and I possibly could have pointed it out, there's a lot going on this morning. Not making an excuse. I saw it. I didn't really feel that a reversal was something I would be able to take because I was trading multiple indexes. But the reversals have been very strong and an easy opportunity. I would never call a reversal an easy opportunity because it's not, they're not. They're very hard to time. And it was a very big spike. So it's very important that you read the DMMs. You can't totally rely on me to cover absolutely every single thing because sometimes we'll be doing what we did today, which was trading an alternative setup that we tested. So my attention was on explaining that alternative setup also. Chantal, everybody should give a shout out to Chantal and thank her for the effort she puts in with our testing. And when you talk about teamwork, just so you understand how this all works, I beg Chantal to do my testing. Okay. I beg her. I say, Chantal, please do my testing. I don't have time. And she'll do the testing. And then I test her testing. I'm teasing. I don't beg her to do my testing. I ask her, Chantal works for us. Okay. Chantal works for us. She does the testing and then I test the testing. And if I have questions about it, then I go back to her and we go over it. Now, this was an alternative move on gold because the news was bad. All right. Now, gold's actually behaving the way it should. Bad news on gold should be a push up. Why is the news bad? Because inflation's hotter, prices are hotter than they thought. Okay. Chantal is great, Jody. She's absolutely great. Now, the point, I guess the point I'm making is this NQ range trade, it's something we're looking at quite a few reports for, and we're going to work with it. I would not bother. Let's look at the video. I would not bother with the breakout on PPI for a while. It's just not working well. You could trade a reversal on PPI. Now, we've done a lot of videos on trading reversals. They're hard to do because with a reversal, you always have to time the move perfectly. Now, it's real easy to test a reversal in replay and show it working. Like today, I know there's going to be a reversal, right? So it would be real easy for me to download the gold data, okay, which I'm doing as I'm talking. It's easy and show you because the DMM says you can do a reversal. If people want to stick around, I will happily show you one method for doing a reversal. Okay, I can show you. Let me show you. Now, YouTube folks, before I forget, you're watching. We made money. We made over 390. We made 390 bucks on this report, trading really small. So we have a link if you'd like to join our trade room, okay? www.jointhetraderoom.com. www.jointhetraderoom.com. So YouTube folks, you can come in the trade room. It's not delayed, okay? Now I'm going to download the gold data. Today is the 15th. I'm going to download GC 422. It takes a second. Okay, the data is now, it's funny, it's taking longer than normal, makes me look foolish, but it's done. So now I'm going to turn my charts off for a second. Okay, and Calvin, using a bigger stop, perfectly okay, Calvin. I was thinking of going to 25. We use 60 on CPI, Calvin. So I'm totally, Calvin, you've been around long enough that you know what to do. You know what to do. So I'm going to disconnect my live. I'm going to show you real quick how easy it is to do a reversal, how easy it is to set it up. Okay. But it's challenging to actually do one. So our charts are on the correct chart. Okay. Gold GC 422. We just have to put the boxes on today's date, 215. Okay. Then in the blank space, I right click my mouse and I click go to, and I put this morning's time of the trade a few seconds before, 8:29 and 50 seconds. I'm giving myself 10 seconds to get the replay started. Now, Ninja has a bug where it's going to make me enter the time a second time when I press play. Nope, it's not doing it today. Okay, so now I'm going to put my setup in. I want to set up a reversal trade. Strategy, we have a trade called a reversal trade, okay? And I'm going to get rid of this time. We're not using this time anymore. We're using the replay time. With a reversal trade, so you go and choose the trade type is a reversal. Choose the reversal. You can label it if you want. But what's important about a reversal trade, you only need three things. The number of your contracts, how many you're trading. So I'm going to trade 2. I'm going to go for 10 ticks and 25 ticks. And again, I'm cheating. Why am I cheating? Because I know there's going to be a reversal. It makes it much easier. 25 tick stop because these markets are volatile as crazy. So that's the second thing I need. I need number of contracts, how many positions, stop, and I need targets, okay? Those are the three things. So targets of 10 and 25. My stop is 25. You don't have to worry about time. You just apply a reversal trade. And when you enable it, you get buttons. Okay, you get your buttons. So what you're expecting to do is if there's a burst down, you're going to click the long button. You're going to go the opposite way. If there's a burst up, you're going to click the short button. Okay. So I'm going to press play. And when there's a burst in candle, I'm going to go the opposite direction. This, we know it's going to drop down and then burst up, okay? And not challenge our stop. Bingo. This would have been an easy reversal. The idea with a reversal, and sometimes you'll get stopped because you'll do what you think you should do, showing it again when you get a big candle. And this was not the easiest candle to reverse. It didn't explode fanatically, okay? But it was a fairly large candle. So look at it one more time. When you get a large candle and the DMM says reversals are common, give yourself a good size stop and reverse that big candle. So I'm watching, I'm reversing. And especially you have help. You have the low of the day. It's probably going to drop to the low of the day and possibly reverse. It might break the low and still reverse, right? But that's how you do a reversal. Today was easy because it dropped and changed direction. It was very simple. The markets are not always that easy. Sometimes it'll do a double candle. It'll do two candles dropping down. And if your stop's not big enough, you'll get stopped out. So, any questions, folks? Any questions? Let's look at the video now and see why the PPI was so darn difficult to trade today. But it really was. Let me reconnect my charts. So you can see that gold would have been tricky. And look at gold's behavior. It's been acting pretty volatile again, right? Let me show you the video. Let me render it. It takes 1 second. It takes 5 seconds. So PPI made a few dollars on gold. If you used the DMM, you would have made a couple of more ticks. And let's double check that and make sure the bracket looks safe. But I still stand by my larger bracket. I never regret making a couple of less ticks if I feel it's going to help me to be safer. These markets are volatile. So here's the market behavior right before we traded. And I really appreciate a lot of folks hitting that like button. The rest of you hit that like button. Sign up for our channel, or even better, www.jointhetraderoom.com. So let's look at our bracket. Look to be pretty easily safe today. So today, a very tiny bracket was safe. And it's just, that's the way it goes, okay? That's the way it goes. We did not get a big enough move to hit my larger target, but the DMM looked pretty darn good today, okay? The DMM looked pretty good, pretty good. It may have hit 5 and 10, okay? Good chance it would have hit both those gold targets. Now, for people that like trading the NQ, let's watch the NQ range. So Calvin, you're saying you traded at the time of the report rather than waiting like we waited, or is that what you're saying? So I didn't even watch the NQ at the exact moment of the report because I was watching gold. I knew gold was going to fill earlier. To me, well, see how the range, if there's continuation, makes the trade so much easier on the NQ. You don't have to even think about a whipsaw. It's just not in the cards anymore most of the time. It can still happen, but it's so much less common when you wait for that initial reaction. Calvin, what'd you use as a bracket? What'd you use as a bracket on a regular breakout trade on the NQ? Because I have notes. Because we looked at the NQ as a bracket trade also. Normally, when a range trade works, a bracket trade of some type will work. But the key with the range trade, the way we're using it right now, is we're entering later. We're entering later. Now, yes, a bracket of 10, I think, is too small, Calvin, but I don't know how you got filled long. I didn't see a long move. I don't know how the heck you got filled long. What I was going to say, there's a trick, an old feature in the software that can be very handy in these volatile markets. And it's called, let me find it, break-even trigger ticks. Break-even trigger ticks. It's a foolish way of saying, if the market moves this many ticks, move the stop to break even. It doesn't take doesn't fill anything. It's different than target one stop move. Target one stop move down here moves the stop if the target is filled and hit, okay? Break-even trigger ticks. If your market moves, like it would have really been great on that gold this morning, because you could say if gold moved 12 ticks, move the stop to break even. So you could put 12 in here and it'll move your stop to break even if the index moves 12 ticks. It's actually a very powerful feature of the software. Okay, Calvin, you use micros. So I'll be reminding people about this feature because I like it. It's very interesting. So last time, a lot of people still watching us on YouTube. I know that a lot of people, you can join up with us. So just remember, next time we stream, we'll put a slide up, www.jointhetraderoom.com. Okay, www.jointhetraderoom.com. Any questions, folks? Otherwise, we will be back for the API report this afternoon at 4 o'clock. All right, be back at 4. Any questions? Anybody? Any questions? All right. So thanks everybody for joining. And nice trade if you took the trade. And I'll see everybody at 4. Okay. I'll see you all later.